Margin money for LCBG. What is the treatment adopted by banks and how it is shown in the financial statements? Let's understand through this case. Mr. Vinu wanted to understand the treatment of margin money against LCBG in financial statements and connected matters. Please guide. See, banks will be collecting margin money when they issue letter of credit bank guarantee. Let's say for example, they are going to issue letter of credit for 1 crore, then bank will say the borrower has to deposit 10% margin money. It means 10% of 1 crore, 10 lakh equivalent deposit have to be maintained with the bank, and that deposit will be lien marked. It means these are all the funds deposited with the bank as a security for this facility. So banks will be stipulating this for letter of credits, bank guarantees. So when funds are deposited by the borrower with the bank as margin money, then those deposits will be blocked. It means a lien will be marked. It means they are not available for any other business use. So let me also show how these deposits are going to be presented in the financial statements. In the balance sheet, they predominantly come under current asset, because letter of credit, bank guarantee, when they are given for working capital purpose, then any margin given for that will also be treated as part of funds locked for working capital. So they will come under current asset classification. Okay, so in most of the case you will find them under other current assets, but in certain cases you will also find it under non-current asset classification when these non-fund based credit facilities are given for a longer period of time, say more than 1 year. Look at this example. LC limit of 50 lakhs is issued, 10% margin is stipulated. It means on 50 lakhs, 10% works out to 5 lakh. So the borrower will be asked to open a fixed deposit of 5 lakh, and on that bank will have a lien. This fixed deposit cannot be used for any other purpose. It means it can be returned back to the borrower only when LC related all aspects are completed. That is, the borrower has honored the LC related payments and no amount is due in favor of the supplier. Then in those cases, LC will come to an end after the receipt of goods and after the payment. Okay, only then this fixed deposit will get released. So these margin money have certain other effects as well. They affect the liquidity. Yes, in the example what we have seen, for 50 lakh letter of credit, they have to keep 5 lakh idle with the bank in the form of a deposit, and they can't even use it for any other purpose. So it is going to affect the liquidity. It will impact the working capital planning because that money cannot be used for any other purpose. But for banks, it is a risk mitigation tool. In the event of default, let's say the devolvement of LC or the invocation of BG, they can make use of the margin money to pay the beneficiary to the available extent. Okay, and these deposits are refundable when those LC or BG comes to an end. And for business, these margin money are not an expense. They are basically a deposit with a lien marked. So they may be treated as current or non-current depending on the duration of the non-fund based facility. And here we go. Credit and Financial Analysis Mastery course. It's a comprehensive pre-recorded online course that comes with 15 modules of video lectures, basically 70 plus hours of video contents, multiple ebooks and reading materials related to credit and financial analysis that will make up another 30 plus hours of content. So totally it is 100 plus hours of learning resources. Then you will also get access to a private community in Telegram for clarifying your doubts in credit and financial domain. Then you also have the flexibility to choose 1 year subscription or lifetime subscription depending upon your learning goals. So by joining this course, you will learn basics of credit analysis, how to read balance sheet, financial ratio analysis, cash flow, fund flow analysis, how to arrive at credit risk rating, how to prepare CMA report, cash budget, how to assess credit facilities like CC, OD, LC, BG, term loan, how to write bank loan proposal, and you will also have access to case studies related to credit analysis. So to join this course, to know more about the course, comment CFA, and I'll share the details with you.